Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on December 13th. So in recent weeks, listen, it's been a great last few months, really, and a great last few weeks for the market as a whole and leading growth stocks, really since the election. But we've been talking about keeping your feet on the ground. Things are extended price-wise and some time-wise too. And this week was the first time we've really seen some legitimate air pockets sort of out there among a lot of these different stocks, okay? Now, we have seen some short and intermediate term abnormal action here and there, but I would say among individual stocks, pretty much everything has wobbled in terms of leading stocks, growth stocks especially. They've all kind of wobbled. I wouldn't say most of them have flashed abnormal action at all. Most have pulled back normally, consolidated normally, gyrating around, that sort of thing, which isn't unusual given the runs they've had, okay? Top-down evidence is still positive, although I would also say the broad market, which we talked about a week ago, we said it was kind of lagging a little bit, even as the big cap indexes were going up. It's continued to lag. I think coming into today, the advanced decline line, and we'll see this just in some regular charts, the advanced decline line of the S&P 500 has been negative 9 days in a row, even as the indexes have been going up, which is probably not the best, healthiest sign. You like to see everything swimming in the same direction. December can be tricky with cross currents, but even so. So where does it leave us stand? Well, I'm obviously more of a growth stock guy, and we hadn't been flooring the accelerator, actually, taking some partial profits, holding a little bit of cash. We did do some paring back this week, and my attitude in the near term is this. We're holding a decent chunk of cash in Cabot Growth Investors model portfolio, up to about 37% cash, mainly just taking cues from individual stocks. It's not a broad market or a general market call. At this point, it's just about being flexible. We haven't seen much of a bounce in support in those stocks. There's been some support, but no real strong buying since these things hit air pockets. If we see that, I think I could put some money back to work pretty quickly. If not, it wouldn't be unusual to see some further reverberations, meaning some follow-on selling, more gyrations, just tricky trading going forward. So right now I'm comfortable holding, I wouldn't say a ton of cash, but more cash than you would think if you're just looking at sort of the top-down indicators and just seeing how individual stocks kind of progress from here. Okay, I have a lot of charts to show, so let's just hop into the charts. As usual, I'm using a program called Market Surge. It's a product of Investors Business Daily. You can learn more at marketsurge.com. Okay, major indexes. So here's the NASDAQ, and I'll show you the S&P 500. A little bit of a reversal as I record this here. But you can just see it's been acting great, right? Accelerating higher relative to even the S&P 500 moving higher. And that's all to the good. And the S&P 500, pretty much the same thing, well above the moving averages. Not as strong, but you can just see well above 25, 50-day moving averages, above the 6,000 round number for whatever that counts, okay? And that's all to the good. And that counts. These are the big cap indexes. It's where obviously most of the market cap is. It's important. Also important, though, is the broad market. This is the small caps. Okay, this is the Russell 2000. Having a couple of bad days here. Still above, there's key support here. It has been gyrating since the election back here. So still positive, but losing altitude, okay? Mid caps, same sort of pattern, still positive, but steadily losing altitude. The New York Composite, which is a little bit of a broader measure, actually ticking a little bit below the 50-day line today. Not that that's some horrible red flag. And there are energy stocks and stuff like that, excuse me, on the New York that can affect things. But, we're seeing some weakness there. And just as I mentioned before, last week, I think, this is XLF, this is financials. Again, not a horror show, but kind of a prolonged pullback, sort of the longest pullback we've seen since the election. That's short term. I'm just saying since the election, tedious pullback. Even if you look at something like RSP, this is the equal weight S&P 500. Again, it's been pretty much straight down here the last couple of weeks. So even though the big cap indexes have been going up, the broad market had been lagging last week. And now this week we're seeing, this is FFTY, which is just kind of an IBD 50 fund. It's not an exact tracker, but you can just see it had a great run. Obviously, it's been volatile. It's had a great run. Had a big down day on Monday, another one on Tuesday. And since then, it's steadied itself, but it really hasn't bounced at all. That if this had come down like this, see this decline right here, you have this 1 or 2 or 3 day sell-off, and then within 2 or 3 days, we ramp back up at least halfway back. You'd be like, okay, the buyers are still there. To this point, this is a little bit of a character change, short term. Again, this is all kind of short term for some of this stuff. and just want to see how it plays out given some of the other yellow flags, the giddy sentiment, and obviously the huge runs we've had. Okay, the actual IBD 50 index kind of similar, not quite as sharp, but just kind of selling off here and no real bounce yet. So you just wonder if there's going to be some more selling, which wouldn't be out of the ordinary given the runs they've had. Once the tide turns, it doesn't mean these stocks fall 50%, but they can get hit. Okay, couple other things before we get individual stocks. Interest rates, these are kind of like on again, off again, so we'll see how it goes. We did have a nice decline. This is the 10-year note. We did have a nice decline from, call it 4.5, which was a level we had mentioned, just kind of round number above there, probably bad. It did pull back here to call it 410, but now it's kind of ramping back higher. So obviously, again, it's December, things can change, and there's some cross currents and year-end positioning and tax loss. There's a lot of things that are going on. But I mean, if the rates keep doing this, that's probably one reason the broad market has sort of accelerated lower this week. Okay. We also mentioned chip stocks, which interestingly today we'll mention Broadcom, which is popping on earnings, but really still not, even with some good earnings reports and stuff like that, not really able to get out of its own way here. So I'm just kind of keeping an eye on it. It doesn't mean it can't, I'm all for it just accelerating higher. That's fine with me. That would be good. But again, just kind of living below these sort of prior highs. It is holding the 200-day line repeatedly, which is a good sign. But if that stops, which it might not, but if it fails and starts to break down, just something to keep an eye on. And last but not least, well, not last but not least, but in terms of the ETFs, I would say the one sort of little, shining thing here is, while we've seen the broad market weaken, we've seen some growth stocks hit air pockets, we've seen some cross currents, right? We're not seeing a rush into defensive stocks. If the XLP was up here, kiting higher, and the broad market was selling off and leaders were getting hit, and that, not that it would be like a major sell signal right now, but that would certainly be the first sign where it'd be like, okay, maybe institutions are changing their tune. Right now, it just seems like they're kind of money sort of sloshing back and forth into different areas, out of different areas, things like that. But there hasn't been a rush into defensive stocks, at least, from what I'm seeing. Okay. I just want to mention this. So this is AppLovin, which, on the weekly chart, just full disclosure, we've had this in Cabot Growth Investor. It's been our big winner this year, which has been great. And this is sort of probably, I would say it's probably the number one glamour stock. I don't know about performance, but just in terms of liquidity and ownership, you got 1,300 funds in this thing. So it's been kind of the number one glamour stock. And obviously it's gone crazy. It's gone from, it broke out around 95 and got up above 400 last week. And we had taken partial profits on the way up, and we sold a chunk earlier this week. Again, just kind of full disclosure. This is kind of what we're seeing. We're seeing something that's, to me, short term. We're seeing a big decline and clearly sort of a short-term change in character, right? I mean, this is below, I don't have it on here, but it's below shorter-term moving averages, like a 10-day moving average, big volume selling and no real bounce yet. Now, maybe by the end of the day, I hope it's up 50 points, but, it's just kind of sitting here on the 25-day line. So it's not broken, but it's a short-term change in character, and there's clearly been a huge run. Clearly, there was a lot of giddiness. Clearly, it was, I don't want to say overdone because it can always go higher, but, people ask, hey, is there any difference in the fundamentals? And my answer is, well, was there any difference in the fundamentals when the stock went up from, 250 to 400? Not really, So these things move on perception. And so far, we're not seeing any real, bounce here. And really, this is the, it's the toughest pullback it's had since the July, August meltdown. So we're just seeing that this is more extreme, but we're seeing a lot of this in some of the leaders where you're having, big run, a lot of giddiness, big volume reversal, and no real bounce yet, okay? Doesn't mean a bounce can't come, but just I would like to see that first, short term, before being like, okay, we're in this year-end run, okay? And we do have the second half of December historically is positive seasonally. I'm not a big seasonal guy, but, you can't ignore that. So we'll just see how it goes. I mean, this has been a big winner for us. We still own some, but what we'd like to see here just in general, when you have these stocks that have sort of done this, and then they really kind of come down for 2 or 3 days, you want to see them bounce. If they start to bounce, even if that bounce leads to some consolidation, at least that bounce is telling you that there's buyers there. if the longer it goes and some of these stocks go without bouncing, again, it doesn't mean they're going to go fall another 50% in the next 2 weeks. It just means that there's probably some other, there's probably still some selling pressure out there that hasn't been let loose yet, okay? So that's just kind of wanted to get out the short-term thinking. Now, as I mentioned, though, there are a lot of stocks that are pulling in normally. This is DoorDash. It's been in top 10 for a while. I've mentioned it repeatedly. So now we have 1, 2, 3, 4. This is 5 weeks of consolidation in here by how I look at it, basically, okay? And there is if you want to look at it like, you could say, hey, 180, it's been churning, so maybe this is going to create a bunch of overhead resistance. I'm sort of looking at this like it broke out, it's had a run, and the first pullback to the 50-day line, if the market is okay, I mean, assuming the market isn't completely breaking wide open, which it's not, should be a decent risk-reward entry point. And if it doesn't work, it doesn't work. But your risk is this much, and hopefully your reward, if it works, is much, much bigger. Okay. GE Vernova, which I realize I've been pronouncing wrong for months. It's Vernova, not Verona. GEV. Okay. This one's had a more extended run. It broke out actually in August, which is sort of a clue that it was a leader. And then it had whatever the hell this is, 9 weeks. I think it was 9 or 10 weeks up in a row. Again, some of these stocks now, they're 5 weeks into this consolidation. I will say it has had some selling here. It had an investor update or day or whatever it was this week that led to some buying, but selling before that, here was the buying. 350 has clearly been a top here or resistance. So how you want to handle is up to you. I'm just saying it's potentially setting up either a test of the 10-week line or, a little bit of a breakout of this tightish area. So just a name I'm still keeping an eye on. I have to mention Google, Jacob Mintz, who's our options guru. He just, obviously this is a mega cap stock. And actually Jacob's pretty good. He doesn't get too involved in the super mega caps because the options activity is so hard to tell, right? There's always just so much trading. But he just said that there's just some huge volume buying in the stock, obviously, but also on the options contract. They have the new chip. Is it something that's just kind of a 2-day wonder and it kind of dies because this chip is just, it's something that's not going to really do much for another few years? Maybe. But it is a bull market and it's a big liquid stock. And I tend not to underestimate things that big liquid stocks that have these big moves. Okay. So Google's just a name. It's not really my cup of tea, but it does look like it's trying to stage one of these, breakout from a base right here on huge volume. Okay. In terms of the chip area, which as a whole remains sluggish, Broadcom today, which is AVGO, gapping up on earnings. We'll see how it closes today. I'm kind of interesting, but I'm really using this more as a marker. Like if this does one of these things, it's going to be bad for chips, bad probably for the market. If it can hold up here, like I said, big liquid stocks that gap up big on earnings or some news on big volume, I tend not to underestimate. So that's just one. And then Taiwan Semiconductor has been one of the better looking chip names. Remember the group's top, here's SMH, which is the sector fund basically. So you can see the top here was June, July, and then there's been some of these subtops in October, November, and now we're hovering near the 200-day line. Meanwhile, you have Taiwan Semi, where here's the sort of group top was in June, July. Now you've hit higher highs here, and it has come down in here, but it's been I'm kind of getting all over the place here, ramping up and consolidating. So you'd like to see it settle down, but net it's not that volatile of a name. It's basically been here between 210 and 180, so 18 and 21. So let's just see what happens if chips kick into gear. My guess is Taiwan will be kind of a, won't be the biggest winner, but my guess is it will be a pretty straightforward way to play it, okay? The energy, meaning the utility names, are mixed, and I think I've mentioned that. But this is Vistra, VST. It had a huge run. I mean, it had a huge run back here, first of all. Then it built this huge base, and it broke out at $100, call it, and went to 170 pretty quickly. Again, this is kind of what I'm seeing here, which is it's pulled back here sharply, but it hasn't done anything wrong intermediate term. It's to the 50-day line. Volume wasn't crazy or anything. It was below average, but it hasn't bounced either. So this is one that if you're interested in it, maybe it's one of these things where if it can continue to really rebound, has a good day or two, it's sort of telling you like, hey, this 50-day line test, like this 50-day line test is successful. But so far, again, unlike this sort of quick ramp back up, I'm a little bit in the weeds today because I am kind of keying a little bit more on the short term, which I usually don't, but I just feel like where we're at in the cycle, it's important. You'd like to see the stock kind of resume higher, but it is a decent setup, okay? Bitcoin, I actually wrote about in Growth Investor. My thing with Bitcoin and a lot of the stocks, this is IBIT, which is the Bitcoin fund. It just broke out with the election. Doesn't mean it has to go up. Doesn't mean just because it's early stage, it's going to go up another 10 weeks. It could fail right here, no doubt. But, and maybe it does, maybe that 100,000 level, which is right around here, is sort of a cap on Bitcoin. It's possible. I would just say, though, that so far it's pretty early stage. It's holding well. The growth stock weakness this week didn't really, not that it would directly hit Bitcoin, but they tend to trade somewhat together. And it's holding in there pretty well. And a lot of the stocks are similar. This is Coinbase, which is volatile as everything, okay? It can move very, very quickly. But again, when you look at the weekly chart, these things had huge corrections, okay? I think it lost almost half its value, but more importantly to me is it did so and kind of consolidated. I think it was 34 weeks, so it's like 7-8 months of consolidation, and then it blasted off after earnings. And since then it's consolidating. Maybe it doesn't work, but I look at it like it's early stage. It's been consolidating here. It's at the 25-day line. It's no real big red flags. And if the market, growth stocks, the risk-on mentality can steady itself, okay, I think it has a shot to do okay. Just some other names running through that I ran through some charts. This is Trade Desk. Don't hear a lot of talk about it, but acts totally fine. It's just been sort of trending higher here, a little volatility near the election, or more recent. I think that was the election. No, it was after earnings, excuse me. That's right. They reported earnings a little bit later in the, around the election. Pulled back, but 50-day line held. And just, again, this pullback here, totally normal 25-day line. Looks pretty nice. Shopify, I've mentioned a bunch. Pulling in here, but kind of my big thing is it had this big ramp, gapped on earnings, and it's basically just been holding in there. There's been some upgrades, there's been some this, there's been some news, but generally speaking, the stock's chilling out on relatively, low volume, which is generally a good thing. Still mentioning, this is CRDO. There's some other, Broadcom plays into it, but just the networking plays and the AI thing, there's been some of these things that have really, Broadcom really didn't, but like CRDO's guidance raise was very, very big. In fact, analysts now estimate, and we'll see, it's a very, most of their business goes to 3 companies. So we'll see how it goes. It's high risk, high reward. But you can see down here, hopefully you can see, but analysts see, triple digit revenue growth each of the next 4 quarters. Triple digit revenue growth is a little bit of a, it's a little bit catnip to me and to a lot of big investors. So we'll see how it goes. Very volatile, but holding up pretty well. Holding this entire gap despite some of the growth stock weakness, I think is pretty impressive. And just a couple more names. These are a little, I like to kind of think outside the box. Interest rate sensitive stuff hasn't been great. Home builders, this is ITB. You can see have really hit the skids here. After a couple earnings reports, yes, interest rates have perked up, but they're just out of favor. But this is Zillow, symbol Z, and it really reacted well to earnings and followed through nicely. And again, kind of like the broad market, it's just been sagging here, but nothing really alarming. Maybe you wait for obviously support and some buying, like I'm kind of doing with a lot of things, but overall it's a pretty nice setup. And last but not least, I can't say this is a great setup because it's not typical, but we owned this earlier this year. I think we we made a little bit of money. Yeah, we did, because we had it back from late last year. But this is CrowdStrike, CRWD, and the stock looked totally fine until it had that huge snafu and the stock fell apart. And the question was this going to be sort of a Chipotle thing where everyone got sick? This was like 10 years ago, and Chipotle was terrible. The stock was terrible for a year or two before they got their mojo back. I don't know. We'll see. I can't say there's been like overwhelming buying, but the stock has made its way back, and see it's been outperforming the market here, not just for, 2 or 3 or 4 or 5 weeks, but for months here. And on the weekly chart, it's been, 3 weeks of sort of choppy consolidation in here. And again, the fact that growth stocks have come in this week and some of these things have hung in there, it sort of gives me a little bit more thought that, hey, there's not a lot of weak hands in there, right? A lot of the weak hands probably got kicked out here. We sold on the way down, by the way. But I'm just keeping an eye on it. Probably not for me, but maybe if it does stretch higher and pull back, it would be something to consider. But just an old name that seems to be setting up again. Back to the market. We'll see how it plays out. It is divergent. Looks like we're getting a reversal as I record this today. maybe at the 20,000 level. It's divergent in recent last couple of weeks where you do have the big cap index is doing well, but pretty much everything else either stagnant to lower, and we've started to see a little bit of abnormal action among some of the growth complex, the IBD 50s, the things that I swim in. So I think if you're heavy in those, I think it's smart to pare back. I'm not saying sell wholesale, but pare back, partial profit, sell your worst stock or two, and let's just see how it goes. If we come in, whether it's later this afternoon or early next week, hey, it's seasonally great, big show of support, big rush higher, and some growth stocks on whatever news, I'm all for putting some of that money quickly back to work. But I'd kind of like to see big investors step into some of these leading stocks that are either taking big hits or just kind of sagging slowly. Like to see a little bit of support show up first before putting some money back to work. Okay, those are all my latest thoughts. Thanks for listening, and be sure to come by again next week for another Cabot Weekly Review.